I think this issue has been there for many, many years. I mean, we've been seeing collapses in the last couple of decades that we all remember. And those come from actual companies, which is direct lending. It could be manufacturing, industrial facilities, or any other types of sectors. But it could also be coming from the actual specialty finance lenders that are trying to defraud their LPs, their banks, their backers. So we've seen that in a lot of cases. I think the biggest problem is structural, as you just mentioned. There's a lot of various types of structures on the true sale, what's called true sale structure, which basically means most likely off-balance sheet finance and purchasing of the receivables, of inventory, of payables, and other types of, you could call it securities, but they're not real securities, they're assets, right? That's why it's called a true sale. So it is really difficult to understand and analyze the entire, in its entirety. So that's why the investors have been pretty dragged into the space, because it still provides the yields, given the uncertainties, right? So underwriting is so important. Technology, understanding of the entire structure, understanding of the entire 360-degree angle of the operational documents, of the supply chain documents, of the shipping documents, invoicing, and things of that nature, they're super, super important for underwriting.
Well, the economy, I'm just thinking about just credit quality in general out there. The economy is still generally strong. I've got interest rates coming down, I think.
Helped a lot.
So I feel like if there the environment is still good for credit quality in general. Is that kind of your view, or do we have some fundamental issues in private credit that are bigger?
Yeah, I think I actually mentioned that last time as well, and so far we're good on that. I do think that private credit as a sector is doing good from a credit quality perspective. The interest rates certainly helped, and you see that in the paid in kind, in the other type of economical factors. What I am concerned about is fraud, and this is what we've seen, right? This year, last year, we've seen billions of dollars basically disappearing from investors' pockets, unfortunately. So what I do believe is happening, and I think that's also correlated to the consumer market too, that with a lot of AI technology tools right now and a lot of various types of creative solutions, it's easier to defraud the lenders, much easier, because the lenders are usually a little bit behind in terms of innovative structure of how to underwrite and analyze investments, and the bad actors are usually much more creative. So I do think that the bad actors are probably going to, appear, and we're going to probably see some more collapses in the U.S. and abroad, especially in the areas where you have to adopt technology to understand the entirety of the picture, the entirety of the investment risk, before the lenders, and whether it's non-bank lenders or banks, really understand that technology is a super important thing to use these days.
What can AI realistically do at this point today to detect some of those early signs of borrower distress?
So AI is really good at repetitive tasks, right? You can build AI agents that are trained on specific tasks. I'll give you one example. Let's say you're purchasing receivables from a company. So every single receivable or invoice is usually backed by a couple of supporting documents that are a true picture of the real life examples, like shipping documents, or a lot of times supply chains get cleared through customs. So you get customs information that's available in the US, or you get what's called warehouse receipts if it's sitting somewhere in the warehouses. So there's a lot of different esoteric types of data that you can plug into and understand if that invoice is real or not. So if a person is doing that, you might have to have millions of people just sitting there and going through the documents. It's a very, really, really difficult manual problem because it's just so much transactional data. Even one company that's making $100 million in sales on a yearly basis, imagine how many invoices is that? It's probably thousands and thousands. But with AI, you can do that in milliseconds, right? And these are all repetitive tasks that I believe AI is really, really good at. So as long as you have domain expertise in the data, I think that's a tremendous opportunity for this specific industry to understand the scope, understand the big picture of what's happening, and understand the transactional documents of the private credit or trade finance specifically strategy.